crisis of confidence video. Obviously, unless you are living underneath a rock, you've probably heard the news about MF Global filing for bankruptcy, and then also they were in talks with Interactive Brokers, and Interactive Brokers was interested in picking up their futures business when they found some accounting issues. They found that there was anywhere from $700 million to $1 billion of customer segregated accounts missing or misplaced, which obviously sent up some red flags for them, and they backed away from the table. Very good trade in the aspect from looking at it from the standpoint of Interactive Brokers. Some of the best trades that you do are the trades that you don't end up taking. So really good trade on IB's part. And then yesterday you had a news announcement or a press release telling everybody that if you clear through MF Global, that CME, NYMEX, and ICE have suspended their trading privileges. So, I mean, a lot of the people couldn't even get on the floor yesterday. If you had anything to do with MF Global, your trading privileges were suspended, and a lot of people couldn't even get on the floor. So most of the people, traders, were filling out paperwork trying to figure out where they were going to clear their trades through, which also made it a little light in the futures business. That leaves us with an interesting proposition here. Now, it seems that Wall Street continues to lose a little bit of respect and a little bit of confidence with issues like this, but there are some really good investment opportunities out there, and two of them being gold and bonds. So anytime you have a flight to quality, or in other words, when people get spooked or scared, they tend to jump over in gold and they tend to jump over in bonds. So let's take a look at that trade really quick. Now, the first one we're looking at is gold. Now, obviously, gold has had a potential double top, which is working pretty good on the short side. There's the number one top, and then here is the second top, and it sold off pretty harsh. To be expected with a double top. Now what we're going to do is we're going to use a Fibonacci tool. We're going to draw from the most recent high to the most recent lows. A normal retracement, just for a natural, normal, healthy market, is a halfway back trade or an ambush trade. So you can see that we have bottomed here and we've retraced back up to this zone. Sometimes this zone can be problems, but right now it's holding up fairly well. So as long as we stay above this initial breakout of this box right here, and this area is going to be 1695. As long as we continue to close above 1695, then our next target on gold will be 1771. All right. If we break back down below this area of 1696-ish, then look for a target to go lower. But as of right now, gold continues to look like it's got a little bit more room to the high side than the low side. You can also see 1, 2, 3, 4, 5, 6 red dots of consolidation with a breakout of the Darvas box. So you've got a breakout, a pullback, and now a continuation. So gold looks pretty good. Now let's take a look at bond. All right, so now as the rest of the world is going crazy, bonds are hanging high and tight up here. So that's a good thing. Even with all the bad news and economic news releases and stuff like that, and if with MF Global taking money and putting it somewhere, we don't know where it's at. The consolidation that has been in bonds is holding up really, really well. So anything above 140 and 26/30 seconds is a good long. Anything below 137 and 14/30 seconds would be a good short. And you can see it's broke out, had a little shake off, short, and now long, and now it's holding that area. So we like bonds in this area, and they can be acquired from 140 and 26/30 seconds and above, with a target slightly below the all-time high of 146, 31, 30 seconds. So take profit around 145, 20, 30 seconds in this area, just so you jump out before everybody else's initial stop losses will be in effect. Good luck, hope it helps, and I'll see you in next week's video.